A mortgage investment corporation, or a MIC as it's commonly called, is a non-bank lender that specializes in investing in mortgages in Canada. So it's essentially an easy way for shareholders to invest in a portfolio of mortgages. It differs in a variety of ways. First of all, it's a flow-through investment where no corporate tax is paid. Second of all, 100% of pre-tax earnings have to be distributed in the form of dividends at the end of every year. As a result, you tend to have a fairly attractive dividend yield for shareholders, normally in the range of 8 to 9% per annum. Atrium's different from many of our competitors. We have 5 managing directors across Canada, each of them with more than 25 years of lending experience, mostly at banks and trust companies where they held positions of vice president or higher. We have 5 offices across Canada. We believe strongly that you should have people on the ground in the geographic areas in which you lend in order to pounce on opportunities quickly. And we have a very conservative portfolio. We consistently have less than 5% of our portfolio with a loan to value of over 75%. What that means is our borrowers consistently have more than 25% equity in the projects in which we lend. In the last 3 years, we've more than doubled the size of the portfolio. When we went public in September 2012, we had a portfolio of $200 million. That has since grown to $450 million today. We expanded in Ontario, but also in Western Canada, namely the Prairies and BC. So most of our growth has occurred already, and at this point, our priority is to ensure that our shareholders get an 8 to 9% dividend yield, as they have for each of the last 14 years when we were a private company initially, and then a publicly listed company from 2012 onwards. We think we're a really good defensive play in a volatile market. Over the last 14 years, we've funded more than $1 billion worth of loans, and we've had only $700,000 of interest losses and 0 principal losses in our portfolio. That loan loss ratio would rival any Schedule A bank. And in the meantime, you're consistently getting an 8 to 9% dividend yield. The TSX listing means quite a few things for us. First of all, for our existing shareholders, it allowed them to get liquidity in their shares that they didn't have before when we were a private company. It'll also allowed us to meet our growth aspirations by being able to access both the equity and common share or the debt markets. So we've gone 5 times to the public markets since we went public, 3 times for convertible debentures, and twice for common shares. And lastly, and more subtly, it allowed us to recruit a deeper management team. There's a lot of prestige and credibility associated with being a public company listed on the TSX.